It's about that time of day again. My name is Joseph. Monday evening, April the 9th. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities, setting up for Tuesday's trading session. And I'm going to cover crude oil, S&P, Nasdaq, gold, and euro this evening. Starting off with crude oil, crude is bullish with a big spike in range pattern to finish today's session. And of course, a spike in range pattern always tells me to look for buying opportunities down below that range low. But I got to be honest, it's the hidden channel that really gets me excited for a nice deep pullback and buying opportunities tomorrow morning. Stay tuned for more. The S&P is bearish after collapsing off today's high. And this strong reversal tells me to use a hidden channel for selling opportunities back down tomorrow morning. I'm going to grab a bigger picture look at the Emini here tonight, and we hope to find a pretty good plan for Tuesday's session. Speaking of the Emini, how about the Nasdaq? Nasdaq is bearish with a strong run lower, and I have my sights on a trap high above the most recent swing for selling opportunities tomorrow morning. Gold is bullish with a big spike in channel pattern. The yellow metal strong move higher and a beautiful new higher high gives me a spike in channel pattern. Spike in channel patterns tell me to look for buying opportunities down at the low of that channel. Got a great chart on gold. Take a look at tomorrow. And the euro is bullish with a strong spike and range pattern finish today's session. And that tells me to look for buying opportunities using seller failures and traps down below that range on Tuesday morning. Boy, speaking of Tuesday morning, we got a great week ahead of us. Second full week of the month of April. As I mentioned in last night's newsletter, we were expecting to have a pretty good day today, this Reaction Monday, and we definitely did. But we're only as good as our last trades. We're going to get ready for another big day Tuesday, and I got a great plan for you guys and gals as we go into tonight's newsletter. Before we jump into the video, I got to remind you guys, if you're on our YouTube channel right now, you can find a detailed description of this entire strategy written out on my blog at sidewaysmarkets.com. I'll leave the link in the description of this YouTube video. And also, if you have any questions about anything covered in tonight's video, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything going on here at School of Trade, head over here to the blog at Sideways Markets and make sure you join our mailing list. That's right, upper left-hand corner, give me your name and your email address, and I'll shoot you an email anytime I publish something new here at School of Trade or Sideways Markets. While you're here, don't forget, I'm always posting exclusive content, charts, links, and updates throughout the week on my social media channels. If you're on social, pick whatever your favorite flavor of choice. And again, I'll be sending out charts, links, and updates throughout the entire week. Speaking of charts, how easy is this? All the charts from tonight's video, you can have them on your computer ready for tomorrow's trading session, right where it says click here to download today's charts. Follow that link, grab those charts, and be ready to go for tomorrow. And then speaking of tomorrow, what are you waiting for? Grab that free pass, upper right-hand corner. If you're not a member here at School of Trade, I'd love to teach you more about the entire trading strategy and shoot you a free pass right for our trade room. Grab that free pass if you're not a member, upper right-hand corner, and I will see you guys tomorrow as a guest in the trade room. And if you have any questions about your free pass, any questions about the mailing list, any questions about membership or free trials or whatever questions you might have, I've always got somebody standing by here on live support to answer all your questions. So hit me up on the live support on the right-hand side of the website, and we'll get you covered there. Pretty good here, guys. Let's jump right in. Intro is out of the way. Thank you so much for sticking around with me here this afternoon. Let's get ready for tomorrow's session. Tomorrow's Tuesday, April the 10th. What do we have here on the calendar? It is kind of your typical second week of the month. You know, the first week of the month, we have non-farms. Third week of the month, right, we got the options expiring, let it roll over third week of the month. But the second week of the month, usually it's kind of kind of a sleeper when it comes to economic or scheduled economic news. Now, of course, we've got headlines about everything happening right now, right, all over the world. So we get a lot going on out there, unscheduled stuff right now that is more than capable, right, of giving us plenty of volatility here this week. So don't let the kind of quiet news week make you think this is going to be a sleeper here this week, because if you like what you saw today, we got a lot of great volatility today. We may see more of that here for tomorrow. Now, obviously, we got some, again, not much news here this week, but tomorrow we do have the PPI number tomorrow morning at 8:30 a.m. Eastern time, so keep an eye on that. Tomorrow morning, we'll be opening up our trade room at 8 o'clock Eastern time, and of course, we'll trade around that news together. Later on this week, we get the FOMC meeting minutes, and of course, the inventory report on Wednesday. Wednesday definitely is the day where all this news is jam-packed in. We got kind of a sleeper on Thursday. Not that big of a deal with those jobless claims. And then, of course, nothing on Friday besides, right, the JOLTS report. So not a lot of news here this week. A lot of the headlines we'll be reading will be unscheduled news. I'm sure the White House will keep us busy. I'm sure China will keep us busy. And, of course, who knows what happens, right, in the Middle East this week as well. We've heard a lot of turmoil happening overnight and over the weekend. So, your guess is as good as mine. But as always, right, I'm going to keep my eyes and ears open. Tomorrow we've got our economic news at 8:30. Outside of that, I'm like everybody else. I'll be watching those headlines and reading price action, right, as they react to those headlines as we get it. All right, let's jump right into our charts here. You guys have been patient enough. Let's grab some charts, and let's get this plan underway here. Get ready for Tuesday's session. What do we got here? First of all, crude oil, then over to the S&P, Nasdaq, we'll go some gold, then, of course, wrap it tonight on the mighty euro. Crude is bullish with a strong run higher, all the way back into the range from last Friday's non-farm payroll report. Now remember, the Monday after that big non-farm payroll report is a much easier day to trade, and we definitely saw an example of that today, didn't we, right? Today was much easier to trade than it was last Friday, and we pretty much just, as you can see here, we pretty much had that big dip down on Friday, and then surprise, we're right back where we came from, right, the following Monday. A much easier session today to trade, right, than last Friday. So it's pretty obvious the bulls have controlled a big spike in range pattern. That tells me to look for buying opportunities down below that range. But we also have a trend reversal from Friday's session. And you know me, every time I see a trend reversal, I'm always looking for those hidden channels, right, as support levels to be a buyer on the pullback. So again, we got a lot going on right now. We've got a lot going on this chart here. But first, I want to take a step back, because one thing that every market tonight has in common is there is a bit of a bigger picture going on. Here's a 30-minute chart of the oil. Now, you won't see me using this chart at all to trade with. I would never trade with a 30-minute chart, just not my style. I like tick charts because tick charts allow me to use small amounts of risk. But at the same time, though, there is a lot of clues right now in the bigger picture here as we go into this week. For example, if we're wondering, right, why the market was so aggressive coming off of that low, well, it's probably because it was right back down to retest the low from earlier last week. So now, of course, double bottom at that low, and we have to assume they're going to be hunting for, right, these highs between 64, right, 64 and 63, right, 79. So we have to assume this is one big range, and we have to assume the buyers are trying to get to, that 79 area, to say the least, right, a little bit further up the food chain, up around that $64 a barrel. If they really get, right, if we really get a good punch, we may find ourselves all the way back to the beginning of April, right? I guess the fools on the bears at that point back around that 65.20 area. So in the short term, definitely looking at that 63.79 area as a key target here for those bulls. And again, we'll use this bigger picture look here this week, right, to give you a little bit more clarity. Now, I mentioned earlier, right, this was last Friday's non-farm payroll mess. We dumped lower and then, of course, right, back going higher here. And you can see, right, we're right back at the middle of that triangle if you draw those two trend lines off of that high. that is, it's not something to ignore. It's definitely something that's important, but in all reality, what's really the most important thing on this chart is this strong move higher, right? The strong move higher barely pulls back to the moving average, right? Never pulls back. And when it does pull back, look what happens. It fails to retest the high. Now, we know this, right? Anytime we see a strong move in one direction, what do we usually see? A two-legged pullback and a retest of that high. So it looks like the buyers weren't too content with buying that high. It looks like they're going to try to go in here now for another leg lower, and that's where I'm looking for buying opportunities here tomorrow. So looking at this now, I'm going to draw that trend line off the high. I'm going to draw a trend line up off that low, flat moving average. This creates what we call a spike in range. Now, if you watch last night's newsletter, or last Thursday night, I should say, last Thursday night's newsletter, we talked about how to use, right, a spike in range pattern. So what I'll do is I'll put a little link up here for you guys. I'll put that link up there. So if you missed last night or last Thursday night, right, if you missed that newsletter from last Thursday night, go back and watch it. It'll give you a good review of what a spike in range pattern is. Strong move up, right, and here we have our trading range. Right, we're going to double top at that high. And anytime I see a spike in range pattern, again, I'll go over it briefly here right now, but I would recommend going back and watching the previous newsletter, because that'll give you a much more in-depth, right, review of it. I'm looking to buy, right, down below the low of that, right, of that channel or that range. I'm going to do it using failures, right? Using failures. So using that 2-try rule, using that failure, I want to buy down below the low of that range. So that, in my opinion, is the most important clue we have on this chart. Now, another important clue, this was a trend reversal. If you recall, last Friday was a big whole bloodbath, right, going lower. And whenever we have a trend reversal, I always like to look for what I call a hidden channel. So I take the last swing, I mark it up to the highest point of that move, and then I pin it down at these lows. And wouldn't you be surprised here, right? Those lows line up beautifully off of that low. That creates now, if I back this up a little bit, that creates now a beautiful level of kind of hidden support, right? It's not really screaming at you. It's not something that you're going to learn in one of those, beginner 101 or technical analysis for dummies books, right, where they just rattle off a bunch of useless definitions and show you how to draw unreliable trend lines, right? In a real market, real traders have to get more creative, right? The stuff you see in the textbooks happens great in textbooks, but it barely ever happens in real life trading, right? So when we see a reversal like this, you can try to find this trend line all you want up here, but you're not going to get much off of that. You've got to find a much more just actionable trend line here, and that's that, right, that hidden channel off of that low. Then, of course, right, there's that 63.79, right? We have to assume that's going to be a big target for those buyers because of the big picture look, right, that we saw at the beginning of the day. Or at the beginning of this intro. So we have a bull market, right? In a bull market, I want to buy at support. Simple as that, right? So where do I buy at support? Well, first of all, right, I've got some support levels here, some prior swings at 22, at 05, and of course down around that 80. I've also got some support levels coming in. If I draw this trend line off the high, I can bring that down to the low, right? That's a support level I can use. But let's make no mistake, right? I really want this one right here. This is the one I really want right there. That is a support level there as well. So again, I want to buy at support, right? I want to buy at resistance. And those support levels, right, could be as high up as 22. That could be as low, right, as this 62.08. The most important thing right now is I want to see this market pull back. I want to see it pull back because I can see this is a level of resistance overhead. And I don't want to buy into resistance. I want to buy into support. So I want to pull back. Now, how do I buy this pullback? Well, a couple ways here, right? See a pullback, right? Market pulls back. Moving average comes down. Now, my favorite way to buy a pullback when we go below the moving average is to look for sellers to try and sell that next test of the moving average. See, if they try to sell that next test of the moving average, the market's bullish. Remember, it's not a bear market, right? So selling retracements is great in a bear market, but not so much in a bull market. In a bull market, most of those retracements, most of those pullbacks will fail. And that's exactly what I'm looking for, right, for the buy going back up, right, back up into that range. We saw a great example of that right here, where we went down below the moving average, pulled back to the moving average. Sellers tried to sell it short, but look what happened, right? It failed. We saw a jump up, a pullback, and run, right? Now, again, it wasn't successful to go back to the high, but that is the basic principle of the pattern I'm looking for, right? We go below the moving average. I look for those sellers now, right, to try to sell this move lower. I know now where their stops are, and we look to buy into the failure, right, of those sellers, right? And again, we'll use some simple price patterns, right, to do that. Don't forget, I can't go over everything on this newsletter. We'll be here for 5 hours, right? But if you do want to learn all the patterns, we've got a great free trial on the homepage of our website at schooloftrade.com where you can learn all about these entry patterns, right? So I can't go over everything right now, unfortunately, right? Or else I'd be here all night with you guys. But if you do want to learn the patterns, though, the actual entry patterns that I use, definitely take that free trial on the homepage of my website. And we'll talk more about these failures. Failures lead to strength, right? That strong move up. And if I can see that strong move higher, then I can buy that pullback, right, to the moving average from there, right? So failure into strength, right? Failure into strength, strength into pullback, and then pullback, right, going back up to retest that high. And what I'll do is I'll leave a runner, right, up at that prior day high, right, for tomorrow. And again, because I think that's going to be, right, your big target there for tomorrow. So as price pulls back, looking for that failure into strength, strength into pullback, and pullback back up, right, to retest the high. And I got my eyes on these levels of support that we're going to use to accomplish that. Now, what if we keep going sideways here, right? What if we keep going sideways? We know what we want to do if price pulls back, but what if we keep rattling around here sideways tomorrow? You know, what if it just gets stuck in this little trading range? That's okay, not to worry. Just focus on buying below the low of that range because, again, it's a bull market, and whenever we get a bull market going sideways, I want to be a buyer down below that low. I'm going to use the 2-try rule, 1 try, 2 try, and again, this will make a lot of sense when you either take the free trial, right? We'll teach more about that there, or, right, don't forget that, right, that last night's newsletter, right? Last Thursday's newsletter, because I'll teach you more about the pattern there too as well, right? So 2-try rule, failure, and then of course breakout, pullback above that high, right? So 2 options here. One would be, right, one would be the failure below the range. The other option would be the fake out, breakout, pullback above that high. And again, go back and watch last Thursday's newsletter for a really detailed forensic review of that breakout, pullback, little fake out, breakout, pullback pattern. Now, what if price goes higher here? What if we go higher here? Well, if we go higher, right, if we don't pull back, right, what if we go higher? If we go higher, I'm watching for a potential spike in channel, right, because it was a pretty strong move higher. So if we do end up going higher here, watch for that pullback, right? Watch for that pullback off of a spike in channel, right? Notice how I'm using that trend line off the low to create a spike in channel high. So I'm watching for a spike in channel pattern as we go higher. Now, it may be steeper than that, right? It may go something like this, right? It may be a much steeper spike in channel. So if that's the case, that's all right, right? We'll just have to adjust that spike in channel, right, and buy off of that low. As you can see, whenever the market's bullish, I want to be a buyer, right? I want to buy at support. So if it goes sideways, buy below the low of that range. If it pulls back, wait to test those levels of support and buy the seller failure. If it goes higher, don't chase after it, right? Simply wait for the pullback, right, and buy off support from there. So a really good plan of attack there on oil. And again, that bigger picture look here on oil really, I think, paints a pretty good picture for us here, right, to plan our trades here for tomorrow. From the crude oil now, over to the S&P. Let's grab the Emini. S&P is bearish after buyers were unable to hold the pullback to the low of the channel and then collapsed on strength to the downside. Now, this might just be a deep pullback, but this move lower is so strong that I just can't justify being a buyer until we see more proof back above that moving average tomorrow morning. Knowing this, anytime the market turns directions, I like to draw a trend line off the lows, copy and paste up to the highs, and look for selling opportunities using this as a hidden channel resistance level, waiting overhead, right, with the target going back down to retest Friday's low, right? So we assume that sellers are trying to get back down to retest Friday's low. Now, the theme of tonight's newsletter is the bigger picture. Let's grab a bigger picture look here now on the S&P 500. And when you look at the 30-minute chart on the S&P, what's the first thing that stands out? Higher highs and lower lows. Higher highs, right? Or sorry, higher lows and lower highs. Excuse me, a little slip of the tongue there, right? And you'll notice, right, where are we? We're right back in the middle of that range. Now, this is an important clue because we're expecting to see a retest of Friday's low tomorrow morning. But if we get hung up and all slopped up here in the middle, we're going to know what's going on, right? It's this trading range. It's this triangle, and again, I use a 30-minute chart just to show you the bigger picture here. Okay, so we're on the lookout tomorrow for a potential, right, kind of bouncing around this triangle. And if we do see this triangle start to hold things up, right, if we do start seeing the triangle hold things up, we'll look to sell high, buy low, right, and avoid the middle. So I'm going to be keeping my eyes on that tomorrow morning, and when we come out tomorrow morning, before the opening bell rings at 8 o'clock Eastern time, that's the first thing I'm going to be looking at tomorrow is going to be how they're reacting around that potential triangle. Now, knowing this, right, here's what we do have. The buyers had a very strong move going higher here, right? Nice strong move, connect those highs, bring it down to those lows, and you can see the sellers were able to hold that pullback. Remember, guys, this is where a beautiful failure pattern would have been nice to take right off of that low. But you'll notice there was no failure pattern to be found, and all it did was strength, pullback, strength, and just too much, right? Too much strength going lower for me to even think about being a buyer on this market right now. I don't think anybody can look at this big move and go, yeah, I think I want to buy this, right? It's a little bit too strong to be a buyer right now. Remember, anytime we have a trend reversal, I always like to mark up that low, grab that low, bring it up to that high, and now that gives me an area to look for selling opportunities on the pullback. You know, in all reality, what I'd love to get here, though, is above one of these prior swings for a trap. So the ideal scenario for tomorrow is, again, as these sellers try to get back down to retest last Friday's low, with this much strength, we should come out and be able to see another leg lower, probably a measured move. You don't see a lot about that right now. There really isn't much of a measured move, right, to work with right now, but look for that as a measured move going lower tomorrow. And I would really love to see is a move above the moving average, up around resistance, trap high, buyers try to buy, they fail, right, and we see that strong move back down. Strong move back down brings that moving average back over, and we get a chance for a pullback pattern coming off of that moving average. So again, first one will be the trap high, right? Trap high is the first selling opportunity here for the bears. Okay, that'll have the most profit, but it'll always be the least reliable. Then, of course, we have the buyer failure. That buyer failure then leaves the door open for sellers here. That's the second pattern I'm watching on the pullback. And then, of course, the pattern with the most amount of reliability, but the least profit because it's the lowest on the chart, right? You're always playing that balancing act between profitability and probability, right? Well, we know that that pullback pattern, that's going to be the last option here, right, as we go tumbling back down to retest that low. And then again, if we for some reason stall out and can't get back down to that low, that's where that triangle comes into play, which we talked about right at the beginning of this S&P review. So looking at this now as a bear channel, that's my plan if price pulls back and goes right and goes higher here. If the market keeps running lower, right? If we keep running lower for whatever reason, right? Price keeps running lower. Find those prior swings, and we're going to keep doing the same thing pretty much, right? Up, trap, failure, strength, pull back, and right back down. Again, if the market keeps going lower, that doesn't give me the opportunity to throw away my trading plan. My plan says sell in a bear market at resistance, and I'm going to keep on lining up these lows up to those highs and keep looking for selling opportunities coming off of that resistance, right, going back down to retest that low. And again, as I'm talking about these traps, failures, strength, and pullbacks, if you want to learn all the details about these patterns, I can't go over them here on the newsletter because there's not enough time, but make sure you join the free trial on the homepage of our website. I'll put the link in the description, right, of our YouTube video here this evening. Grab that link and I'll, of course, right, welcome to teach you all about this stuff on that free trial. So that's the plan if price goes up. That's the plan if price goes down. What if we start going sideways here? You know, what if we come up, we fail, we come running back lower, but now we bounce, right? And now we have, excuse me, a double bottom at that low. In that case, find that high. This becomes a trading range and sell, right, off that high. Keep using those failures, right? Keep using those failures, right, and sell back down again. So if we do go sideways, and you'll know it's a sideways range when we see a double bottom as the market goes lower, you know it's a sideways range, right, when we see that double bottom. If we get a double bottom on it, don't sell low at that point, right? Look left, find that high, right, deepest part of that pullback, and sell up above that high, right, after we see the move back up into that range. Now, like I mentioned earlier, this could be just a big, deep pullback. I don't think it's enough. I don't think there's enough evidence here for the bulls just yet, but it could be a big bull pullback. I mean, after all, right, it kind of trapped right below the little prior swing there, so there's a possibility here for it. How would we turn bullish here tomorrow? Anytime we have a bear market, the bulls have to show me proof. And to do that, what I'm looking for here is a strong move up, a pullback to the moving average, and a strong move through. If I can get that, then I can draw a channel off of those two highs. I can bring that channel up acting as support, and I can buy the low of that channel, right, for a run back higher here tomorrow. Okay, remember, we don't just buy one strong move higher. We've got to take back control for the bulls. It's really important. You remember, the bears have control right now, and for the market to turn back to bullish, it doesn't just get back above the moving average. It doesn't mean a higher high. It means a higher high, a pullback, and then a run higher. We have to see, right, as I always say, right, we got to see that strength, that pullback, right, and that strength. Right? Now, sometimes the markets do crazy things that we saw here where there really wasn't much of a strong move down. It's so much movement to the downside. It's just really difficult to call that a bull market right now. So I'm going to have to wait for a little bit more evidence before we call this a bull market again. In the meantime, I'm looking to sell up at that level of resistance. And again, I'm not going to be totally surprised tomorrow if these sellers can't finish off that move, if they go back up. If that happens, now we know we've got that, you know, trend lines, right? We have a triangle, and I'm going to dramatically adjust my trading strategy once we see proof of that, right, tomorrow. As it is right now, though, it's a strong bear move down, looking to sell that pullback, right? I'd love to get a trap high. That'll make my job a whole lot easier for tomorrow. Now, even more dramatic here on the Nasdaq. Nasdaq is bearish after collapsing off today's high, and this much strength moving lower tells me that sellers will most likely be waiting for the next pullback to sell at resistance. Knowing this, I'm looking for selling opportunities up at the moving average, but that would be even better, right, if we get a trap up above those previous swing highs. So I'm staying patient, looking for entries on the next pullback, again with a target, right, going back down to retest yesterday's low. Now again, here on the Nasdaq, just like on the S&P, let's grab a look at a bigger picture here, right, a little bird's eye view, and you can see kind of the same thing here, right? Looks a little bit similar with this potential trading range. Now again, we have this real strong move down, and typically a real strong move in one direction, you know, obviously outside of any news events, right? This wasn't really caused by a news event. simply caused by buyers, right, walking away. But it looks like we have, right, strong move down. We should see one more attempt to go lower, even if this market is in a range. But you can definitely see on this Nasdaq, draw those trend lines up, draw the trend lines down, and here we are kind of rattling right around this triangle. So I'm going to be keeping an eye on that as we go through the rest of this week. And again, you'll know tomorrow, because if we can't get back down to retest that low, right? If we end up back down and we bounce off that low now you know what's going on, right? It really is that triangle, and we have to take it seriously. Right now, the bulls had a beautiful run higher, strong move up, pulls back, makes that two-legged measured move, but you'll notice strong move down, pull back, right, and go. Again, very difficult to call this a bull market right now. I'm connecting those two lows, bringing them up at those highs. And honestly, I like this hidden channel, but I think that hidden channel is a little bit too steep. I'd really like to get this, maybe it's got to be a little bit wider off that high. I don't know. What I really want is I want to get a trap. I want to get back up to these levels of resistance. This channel is just so steep, it barely gives you any room. The aggressive sellers will definitely be coming in, right, to sell the test of that channel. What I'd like to see, though, is get this market up above the moving average. Give me a chance to really sell high. The buyers will try to reverse this market, and if they're successful, we'll be a buyer right along with it. But the reality is the odds are not in their favor, not yet at least. Looking for that failure, strength, pull back, right, and pull back, right, back down to retest that low, right? So it's trap pattern. And again, I'll teach you more about these in the free trial. Trap pattern, failure pattern, right? Pullback pattern. Capiche? Pretty easy, right? Again, if you're a client of mine, you know what I'm talking about. If you're not a client of mine, what are you waiting for? Grab that free trial. You have nothing to lose, right? I'll shoot you an invite, right, for the free pass, and you can come join me. We'll teach you guys all about these patterns, right, in our trade room. So that's an example I'm looking for if the market goes higher here tomorrow. If we keep going lower, right? If we keep going lower, I'm pretty much waiting for the same thing. If we keep going lower here, I'm looking for that. Look for that move up, right? That failure, strength, pull back, right, and back down. Just because we pull back, just because we go lower does not mean I can start selling too low. I know where I want this thing to go. It wants to have that 64.08 half area back down to Friday's low. Let's see here. What if we go up, we come down, we bounce off that low, double bottom, right? Double bottom tells me trading range, right? Double bottom, trading range. If we see a strong move down, which again you learned from last Thursday's newsletter, right, was you look for that one try, two try, failure, and back down, right, into that range. So if we do see a double bottom here, if that double bottom does take, right, if the sellers cannot keep making lower lows, it doesn't mean a trend reversal, but it does mean we now have to really dig our heels in and sell up above that prior swing. And again, it's on buyer failure, right? A buyer failure pattern, right, using what we call the two-try rule. That is the one try, two try, and then failure back down in. Again, our free trial will teach you a lot more about these nitty-gritty details. And then how do we turn bullish? Strength, pullback, strength, right? Strength, pullback, strength, right? So strong move up, pull back to the moving average. Again, the odds say, right, the law of large numbers says this will fail and end up back down to that low, which of course is that buyer failure pattern for a sell. But if the buyers can take control of this, they'll shoot this price higher. That'll be an easy sign of what's going on. We'll grab that new channel. We'll find that new bull channel, and of course we'll look to buy right off of that low with a target going back up to retest that 18.25. So pretty easy here. I think the only real challenge in the Nasdaq is it looks like we are knee deep in that triangle right now, and so it may limit a lot of the big moves we see, and we may see a heads up on that as early as 9:30 right tomorrow morning. So we'll see what the overnight market looks like, and we may know that before we get into the trade room tomorrow morning. So stay tuned for more on that. All right, done with the E-minis. Let's grab some gold, and they'll wrap up tonight on the euro. Gold is bullish with a big, strong run to finish today's session. And with this being a trend reversal from the overnight move lower, we know the most reliable buying opportunities won't be chasing the move higher. It'll be connecting these two lows, bringing it down to those, connecting the two highs and bringing it down right to those lows and creating a spike in channel. And that spike in channel tells me, right, to buy the low of that channel. Now, before I jump into this bullish chart, and a gorgeous chart, I might add, right? Again, the theme of tonight's newsletter is big picture. So let's take a look at that big picture. And what stands out here? Yeah, trading range, right? So, of course, we had this big, strong move down to finish up the month of March, right? Big, strong move down, right? We had that very crazy two-legged pullback, right? This is gold we're talking about. And then we came all the way back down to retest the low. Now, what happened at the low, right? Did we go lower or did we bounce? We bounced. Remember, we talked about this earlier, right? Anytime a bear market stops making lower lows and bounces off that low, right, what do? We mark up that prior high, and that's where we want to what? We want to sell off that high, right? So sell up, right, back down again. It's a trading range, right? It's a bear market into a trading range. Okay, so you can see this is the exact same thing. It's just much bigger, right? It's just much bigger. Same thing, right? Strong move down, two-legged pullback, bounces off the low, right? So knowing that now, right? Look left, there it is, right? And that's where we expect this market now is trying to go. Once we get up there, we assume there'll be sellers trying to sell this sucker right back down again. In the meantime, though, this is a really good heads up for where we're looking for, right, some targets. So keep an eye on that 1350 area, right, 1350 up to 1352. General area 1350 looks really, really good here, right, for a nice bull target here, you know, possibly later on this week, maybe tomorrow, right? So there's your 1350 area, right, hanging out way overhead. So we've got some good, you know, we're aspiring for some pretty good goals here for the buyers, right? The buyers have some work to do here right now. So now that we know kind of where the buyers want to go, how do we participate in this move? Well, again, we saw a strong move down to start today's session, but look at how much strength, right, we saw it going higher. That much strength all the way back to the high of day made it very easy to want to buy this pullback. In fact, that was the only position we really got into on gold today, and what a great trade it was, right? What a great trade it was for the gold buyers, right, going back up, right, to retest that high, and of course, they're on their way up to that measured move. Okay, now with that is a trend reversal. And anytime we see trend reversals, I always like to go looking for hidden channels. Mark off those highs, bring it down to that low, and that creates that, right, that hidden channel. So the hidden channel, I want to buy off the low of that hidden channel. Now look closer. We also have this great naked reversal line. That is a prior resistance level that hasn't pulled back yet and tested as support. So watch that 1338 area because that creates a great level of support. And then I also do this in just kind of as kicks here. If you draw that trend line down overhead, you'll notice this creates, we can draw a straight line there, that creates a level of support as well. So, you know, in all reality, guys, this could also be an extension of that, right, of that battle zone right there. This could also be an extension of that battle zone if you grab that like this, right? So kind of think of that trend line here now, right, along with that prior swing. That whole area now becomes, again, it's a bull market. I want to be a buyer. I want to buy at support. So where do we buy at support? Look left, find a prior swing. Find a prior swing. Find a trend line, right? Find a trend line. All of these levels make for great levels of support here. All I need now is a pullback. Now, you can anticipate this, right? And again, I'm not going to go over all the patterns right now. We'll do that in the free trial. But you can anticipate this, obviously. If we pull back to the low of that channel, if we test that 38 reversal line, we're now going to be below the moving average. When we're below the moving average, what is likely going to happen? Look right here. Pull back below the moving average, what happens? Bears try to sell, they fail, and the price runs higher, right? Same thing here again. Look for that seller failure. Now, again, the bears may take control, but the odds aren't on their side. So, of course, if we see sellers now trying to sell this market short, we know their stop will be. We can now look for seller failure. Seller failure at support usually leads to bullish strength, right? Say it again for me. Seller failure, or should I say, in a bull market, seller failure at support usually leads to bullish strength. One more time, in a bull market, and I'm doing this for a reason, because if you can memorize this, you'll be head and shoulders ahead of where you should be based on the amount of time you've been doing this, right? I wish someone would have told me this when I was in your shoes. In a bull market, right, a seller failure at support leads to bullish strength. The key is at support, right? So we find a level of support here, right? We find that level of support. There's that level of support, right? Plenty of support. In a bull market, we're at support. Sellers try to sell. Seller failure, right? What happens when sellers get out, right? They get squeezed, and it creates that short covering rally, right? That short covering rally is nothing more than buyers buying at support combined with sellers becoming buyers because they're getting stopped out of that move. That strength, of course, says, let's do this. I don't want to buy high, though. I want to buy that pullback, right, as we go back up, right? So failure, right, that failure into strength, strength into pullback, and pullback back up to retest that high. In this case, up to that measured move, right, up to that measured move. Now, again, we get a pretty deep pullback we need there, so wait patiently for it. Now, what if we go sideways, right? Strong move up. What if we barely pull back, right? We pull back, we double top on there. Yeah, right? Find that range, look for that buy down below the low of that range, right? That's pretty simple. We've talked about that a few times already today. And then, of course, what if price keeps going higher? If price keeps going higher, that's going to be your clue now to be a little bit more aggressive. I'm going to start watching those prior swings, right? And I'm looking for that trap low and a move back up. So if price keeps going higher here, that's going to be your clue to be a little bit more aggressive and start looking for traps on the way up to that measured move. Now, I didn't draw this very well because if we do get to the measured move, remember, most measured moves, when you reach the measured move, two-legged pullback and a retest of that high. So if we do get to that measured move, wait for that two-legged pullback, try to use that level of support, and then back up. We go from there. Now, last but not least, how do we turn directions, right? What did it take to become bullish? Strong move up, right? So strong move down, right? But unless this thing goes crazy to the downside, we're looking for that pullback, right, and that go. Strength, pullback, strength. Drop that new low up to that high, right, and then back down we go from there, all right? And, of course, the target at that point now is back down right to that 30, that 1330 even, we'll call it 1330.1. All right, so really good example there on gold. And again, gold's got some pretty good incentive here for the buyers. We got to find a way in safely though right now. It's not enough to just buy right now. I want to buy at support right in that bull market. And then last but not least tonight, and I do appreciate you guys sticking around with me here. I know we're about 45 minutes into the video right now. If you're still watching this video, you are the people that I work hard for every day. All right, I'll be very, very honest. I know most people will shut me off after we finish up with their market, right? But if you're still here watching right now, that tells me you deserve every ounce of success that you get because you're putting in more effort than anybody else on the planet. So good for you. The bottom line is the euro is bullish with a spike in range pattern after buyers broke free of the overnight trading range and ran straight to that double up target waiting overhead. The bulls have control. That's easy to see. But this trading range tells me the buyers got what they wanted, and now they either need to buy low, right, or get a new high so we can buy a pullback from there. Knowing this, my plan is to look for buying opportunities because we're a bull market. I'm going to do so below the low of that range, and I've got that beautiful hidden channel, right? Look at me in the eye tonight for a support level, right? Or if we go higher, I'm looking for the old fake out breakout pattern, which we talked about earlier, right, on the Emini. So here we go, right? We started the day today. This was the tough part about euro. The euro actually began the day in a trading range. So while we're watching this kind of low, it was relatively slow, right? It was a pretty slow kind of move higher here. You can tell there was something else out there that was impacting this because I was honestly today on the euro, I was looking for a 1 try, 2 try, and a move back down in, right? Because the day began as a range. But as we finish up the day today, it obviously doesn't matter that much about the range. Now, I still have to be aware that range is definitely still there. So if the buyers do for some reason walk away from this and we collapse, you know where we're going back to. We're going back to that range, right? But as of right now, a straight line up, a pullback, and you'll notice we're pretty much getting stuck on this double up. And the double up is just take this move here. You know, there was no measured move, obviously. It was a straight line higher. So the double up is pretty much all we have to work with. If you look one level up, right, if you take this move, right, take this move, right, double it up, and then take that move and do it again, right? There's your triple up. And so that becomes our target, right, for tomorrow. That becomes our next level target, right, for those buyers. Obviously, there's not much to work with here because it was just straight up, right? There's no measured move here to use, just straight up, right? So the double up is all we really have to work with. It's obvious here we're struggling to go through that high, right? We're struggling to go to new highs, but we're not bearish yet, right? It's not a bear market. It's a bull market. It's a strong move up into a range. Right, strong move up into range. You can call it a triangle if you want to. I like the triangle. Triangle is great. Doesn't matter though. It really doesn't. All that matters is we can easily see it's going sideways. We haven't pulled back yet. Call it a range. Call it a triangle. It's all the same stuff. And anytime we have a trading range, you know my plan, right? Failure down below that low, right? And then back up we go from there. So that's the plan there, right, on the euro. And then, of course, I've also got this new higher high here. That new higher high, you guessed it, I'm going to bring it down at that low and try to use that hidden channel as well. So wouldn't that be nice? We could use that hidden channel, little failure off the hidden channel, right, and back up we go. Now remember, to get that fake break pullback going higher, I want to see that moving average come up. Trend line goes through, price goes through, two-legged pullback, right, and go from there. That will be our next opportunity here, right, to be a buyer on that euro, right? Remember, the key is when you have a market going sideways, you got to get below that trading range. So we buy low, use failure patterns, and again, I'm going to go over a lot more detail of the failure patterns and the pullback patterns, all the patterns in my free trial. So make sure you check that out. I'll put the link in the description of the YouTube video, and it's on the right-hand side, right, of the page on my blog here at Sideways Market. So check that out. But the most important thing is I want to be a buyer below of that range. If we go above the high of that range, get that moving average up above the high. That'll give you proof you've got enough strength. And then two-legged pullback, I call that the fake out breakout pullback, which again, I alluded to earlier on in tonight's video. All right, guys. Now, what would it look like for reversal, right? What would it look like here for a reversal? What would a reversal look like? Well, think about the 2-try rule, right? So 1 try, 2 try, failure back in, right? So buyers are looking for that 2-try rule to fail. Well, if that second try is successful, right? Nice strong move down. Okay, we're good. Find that, right? Find that new channel, sell off that high, and the goal now is to get back down to retest this low around that 23,250, and at that point we might end up right back into the range that we came from, right, earlier on in today's session. I also want to bring out one more thing here too. Grab that euro, right? And again, oh, you know what? My data's bad here. Hold on one second. Let me see if I can reload this here for you. See if that, okay, there you go. Good. Right? So here is a chart, again, 30-minute chart on the euro, and again, bigger picture, right? Bigger picture. So the bigger picture says strong move up, pull back, and go, right? So we got a measured move waiting overhead there. But most importantly, though, run up those highs, down to that low. You can easily see it, right? You can easily see it, right? There's that pull back, right, off of that low. So be aware if this thing pulls back, we've got some great support levels waiting down there. All we need now is to get the market to pull back here for us. All right, guys? So bigger picture really gives us a really great kind of bird's eye view of the entire market here tonight. And hopefully we don't run into that chop and slop, right? We get a possible triangle pattern on the E-minis. We get some great opportunities, though, on oil, gold, and euro for a run higher. All we need now are the entry patterns. And don't forget, if you want to learn more about all the patterns we use, a lot of the stuff I just can't give away on the nightly newsletter, make sure you join our free trial. Get a great free trial on the homepage there at schooloftrade.com. Again, I'll put the link, the description of the YouTube video. If you're here on the blog right now, there's a link over on the right-hand side. You can grab that free trial on the right-hand side. Don't forget, any questions out there, we got 3 levels of membership. We got great flexible payment options for our advanced membership packages. And don't forget, if you got any questions, hit me up on live support or drop me a comment in the comment section below the YouTube video. Boy, oh boy, 50 minutes into this video. Thank you so much for sticking around with me. That tells me you are dedicated towards your success, and I hope I get a chance to work with you tomorrow as a brand new client in our trade room. Got to run for now. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye.